Hey everyone, this is Aaron Trevino. Welcome back to our Texas Real Estate and Construction YouTube channel. Um, we have Solomon Floyd here from Dallas, Texas, joining us. He is a repeat guest, and there is a reason for that because he's doing a lot of neat things in the real estate space. So we thought that we'd reconnect, get him back on the show, and it's always a pleasure, Solomon. How you doing today?
Doing good, Aaron. Thanks for having me back on the show. Glad to be here. Great things happening, especially with the way that the market's turning out right now. So it's been pretty good. It's been almost literally, I think, about a year since we last connected. So glad to be back.
That's right. That's right. A year, a lot has changed in the economy and real estate market. Um, how are you dealing with this? What types of real estate deals are you looking at right now, and what do you think is the next opportunity for people who are looking to make an impact for the rest of 2024?
So I'd say that definitely the changes in the way that the real estate market has kind of adapted is what my portfolio was initially crafted on, right? So tertiary markets and military markets, which I don't want to call them immune to economic times, but because the constant rate of cash exists without the fear of mass layoffs, provides a really significant market protection for not only myself, but my investors and our rentals. How we've been able to adjust to be able to make more cash outside of our tertiary market portfolio has been going after some alternative markets and going after some alternative products in that market, all related to real estate in some way, shape, or form, but obviously harnessing the products that come from what that real estate provides. So one of those things for us has been our wine fund. And that's been a very good target for us because you wouldn't think wine as a tertiary real estate play. But if you can find a market that grows really good wine that's practically untouched, that fits the categories of a tertiary market, then you have amazing pricing on that wine. And when you go and sell it back in the US or in China, for example, you have the ability to make really good profit margins purely based on the exact same real estate principles of a tertiary market. For those people who are looking into different things and kind of trying to figure out a way to survive through 2024 and really push through the rest of this year, a lot of people are going to be hanging on the words of the Fed for rate cuts. I don't think that's going to happen anytime soon. And especially kind of into an election year, there's going to be so much turmoil and so much noise that most people should probably be focusing on something that's going to provide them a really good return for the next 4 to 5 years based on, I say good return, but I'm saying anywhere from like 8 to 10%, really focusing in that range, purely based on the fact that we are going to have some turbulent times coming up, especially with this election shift, because now we have almost 3 wars that we're kind of involved in as a nation. So that fallout's going to happen if we get a new president. If we get if we keep our current president, we're looking at another area of more turmoil as well, just based on the fact that the current policies aren't leading to the economic relief that we were hoping for 2024.
Yeah, that's such great insight as well, especially, talking about, I guess, the political concerns that people have. Obviously, the Fed, not to say that people are maybe sitting on their hands, but there's a lot of uncertainty right now. There's a big shakeup in the real estate market, and that's why I thought it was interesting as well when you mentioned something like wine, where it's, you're kind of using that same real estate blueprint, but you're using it in a at a different angle, right?
Sort of. I mean, I've always thought everything is real estate. So you can think of things like vineyards, but you got to find the area and the business that you want, right? But the thing that comes from the ground, that comes from gravity, right, it has to be rented or purchased, which is the real estate play. But the product of that allows you to yield it pretty infinitely. So best part about a house is you buy a house, but you can only rent out either that room or that house. And once that's set, it's set. But with wine, it's every year your price appreciation goes up. When you think of things like a data center, right? Every year, your ability to sell that data center for more than you built it for kind of goes up a little bit more. And so, in finding those alternatives, which you're really going to put yourself into, is a really good position to ensure that you're going to be one, beating the market, but two, staying with the trends of current high yield plays.
Yeah, so in terms of the wine, it sounds like you said you either own the land or you rent it, and obviously the amount of money that you would make with the wine is increasing over time. And would this be something that's done locally here in Texas, or is it done elsewhere? Or
Yeah, so our wine comes from France in particular, and that's just because one, the region's really good, but two, the place we stumbled upon has amazing terroir, which is the soil that's grown. and it's relatively untapped in France. So what we did was we bought an import company, and by doing so, it gave us access to every liquid in France to be able to bring it over. But with this particular region, their wines are what we call table wines, so not very expensive for Europeans at the very least. But once you bring them over here, you incur things like tariffs and taxes that kind of change what that dynamic looks like. But even still, the way that wine's priced, especially in the United States, really does allow for a higher ROI. But based on the fact that all these other people have access to this land, I'm not going to own the land, which takes away my significant risk. The pricing is set by the government in France, which is another big risk mitigation. And then from there, there is the ability to bring it into the country. So I'm basically taking all of the producers that are there and saying, hey, I can sell your wine.
Hmm.
So I will do one of two things. I'll get a really good deal and just buy it from them at a really good wholesale price and then sell it myself. Or I'll work with their negotiant house, the house that kind of negotiates everything on their behalf and actually kind of makes the wine, negotiate with them to get really good pricing and then use it through our Shopify store and then distribute the wine out from there.
Hmm. So I guess what you're saying is because the government's also involved, they're setting the price. That's also, is that a built-in safety net for you, or what exactly does that mean?
It's kind of a built-in safety net until the pricing gets out of control, right? So, it works until it doesn't, but now that it works, and like I said, right, for the next 3 to 5 years, it'll work very well. And then once that stops turning out the returns that we'll need, we'll kind of tamp it down or exit, just depending on whatever we need to do, and move on to the next thing. And that's, what you do in the investment world.
Okay, very good. And this is a fund, right? Are you putting in money into this fund and then investing in the wine, or what exactly is it?
Yeah, that's exactly it. So it's a fund. What we do is just diversify our wine selection. So we'll buy as much of it as we can. One of the things that set us apart is we've partnered with a lot of, say a lot of, but a few celebrities, a few athletes, and a few organizations who can actually purchase this wine in bulk, and then we're just going to white label it. So they'll have their own label on the wine that gets shipped out blank. They'll get it, they'll put their own labeling on it, and then they'll be able to use it in their own restaurants as their own brand of wine. So it does provide a little bit more of a customization feel, especially for things like restaurant groups, hotels, wedding planners. And so now the reach of this particular product kind of goes beyond just the store, it goes beyond the consumer. Because I can sell it at such a price that undercuts anybody else who's going to be able to sell this wine to them, that now they can have way more of it. The biggest thing that we offer is going to be, again, really good pricing, but our minimum order size is really high. So we can move as much of this liquid as possible and keep the system flowing. Our other big, bombshell that we're working on right now is going to be non-alcoholic wines. So those will be coming out next year. And what we're really going to be doing with those is focusing on the market for people who are either sober or just really not into drinking, but they still want to have that or that experience and that feel and that taste of wine without the ability to get drunk. So it'll be a challenge to come up with, but one of our sommeliers and our master mixers he's a master, so he's one of the best out there and at doing this and creating and blending these wines. So now we're going to have really high quality blended wines, whether alcoholic or non-alcoholic,
Mm.
at really amazing pricing. So it becomes a battle of quality over quantity, and the ability now is you don't have to sacrifice one or the other. You can get a lot of quantity of really high quality wine and serve it to your guest.
Yeah. Do you think that's the future, is the non-alcoholic beverages? It seems like I don't want to call it a push, but there's just this almost like a cultural shift to where maybe young people are drinking less, or really maybe even older people. I'm not sure.
I think in general, people are drinking less, and I think it's great. Ever since non-alcoholic beer came out, that's pretty much all I drink, right? I don't really drink alcohol that much anymore, especially if I don't have to, just because I may have to work tomorrow, or maybe I'm in a really good mood, or maybe I'm in a really bad mood. And 9 times out of 10, when you go out, the only thing you can do is drink. So now it's like I can enjoy my time with my friends. I don't just have to drink water or soda. And even with the non-alcoholic beverages, the calorie intake is still well enough to make sure that you're not gonna, sacrifice healthiness for healthiness, right? So now you have the ability to drink something you enjoy and stay fit and stay healthy, which is a big piece of what we're trying to really provide people. And again, all that comes from grapes and wheat. So I can't do any of this without land. I can't do it if I can't store it. I need land for that. If I need to make it, I need land for that. If I need to ship it, I need land for that. That's like the biggest piece of it all is it becomes a real estate play only because of what is produced from the real estate that then can be sent out. But because the real estate is so cheap and they've had it for thousands of years with the same owners, now it's like this accumulative pricing spreads out through what they're able to touch. And that's the benefit of a tertiary market over a primary market or a primary market style investment.
And I think I know I mentioned it before, but that's what's so unique about what you're talking about is it's, when someone thinks of an investment, you would think of maybe tearing down a house, building a house, this apartment complex or whichever deal. No one really thinks about, like you're saying, that tertiary side, right? Or even what's produced from the land, right? The land is the real estate is the land, right? But what's coming from it.
That's it. I mean, again, right? Shipping centers are very popular and they're very profitable for the owners of them. But who's making more money off of the shipping center, Jeff Bezos or the property owner? It's going to be Jeff Bezos
Mm.
because he can move more product through there. So now that you move into a different style of real estate, and this definitely is a concept of going from beginner level real estate investor to intermediate, if not advanced level real estate investing, which is utility of land, right? So if you can look at the utility and kind of get an idea of who's going to be able to benefit from this, who's going to be able to move in here and pay the rent and grow from paying that rent, those are the types of investments you start thinking about making, which are why people have gone from industrial real estate to data centers now, because it's the next big thing. As the boom for AI happens, you have to realize there's not enough infrastructure to support all of this new tech, especially the way that they want it to work. So now there's this huge shortage that's being filled in by every investor, or at least those of us who are smart enough to identify it as an option. You can kind of see how the snowball rolls, and that's how big wealth pockets are accumulated in such short time frames.
With the data centers, you're saying to fill that gap.
Yeah, it's something, yeah, exactly, right. So data centers just as an example, but if you look at the trends of what's fallen off and what's taken off, those are the people who are looking at the utility of real estate versus just, oh, a few homes, right? Homes are one thing, but there's so much more utility to owning land that a lot of people aren't paying attention to. And once you identify those utility needs, it becomes really easy to figure out the investment opportunities that are going to be able to pay out significant returns and keep your initial investment safe.
Right. It's it can be a bit intimidating in a sense, just the way that land can be very unfamiliar to people, right? So if you have a house, hey, more or less, I know it appraised for this. Or if I'm going to build a house, I know that once the construction's complete, it should appraise between this range. Whereas for land, it's a different animal. I mean, how do you, I guess, what sort of math are you doing with the land? It just seems like that's just a very different sort of territory in real estate investing.
I think, most people will just hire an analyst to take a look at the uses of this land and give you a number of or give you a number of different things that are going to work out best. But it's about looking at trends. So if you can identify the trends and spend times in the right rooms to really figure out what people are going for. But the biggest thing is, you got to do your research. So I use Bloomberg as a really good baseline. They have a free YouTube streaming that they'll do all day, right? And all the talk is tech, 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 real estate, tech, 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 tech. Not enough data infrastructure. And you can kind of put those two, three things together. Real estate, not enough infrastructure, tech. Well, tech can only grow if the support system is there, which is not. So you have to build data centers. Well, data center is a much easier thing to build and sell right now than a warehouse is. And again, during COVID, warehouses were really big. So the trend kind of went up like this with warehouses and then immediately started falling off once things started opening back up. So there are more warehouse spaces available square footage wise than we had in the past.
Mm.
What that's done is it's driven the price up. But now if the price is not up, right? You see the trickle down effect. So now everybody has to raise their pricing to be able to compete with not only one another, but with the current real estate market. So now things are more expensive for us, the consumer. So it's just a tying back into the way that you look at an economy. And the way that I see it, things only get more expensive on the real estate. The thing that you must have, right, becomes more expensive. And when you see that, that's where you start really running into these issues where, again, farmers in America, they either have very low rate debt or they have land that is financed through an owner finance contract. So somebody can raise the price on them pretty much like that. Versus in a place like France, those people generally own that land and they've owned that land for years, either free or clear, or it was just a gift from their family. So they don't really have very much debt. And again, the thing for them is not that the land costs a lot of money, right? It's just what they can produce from the land is what takes up most of their resource and most of their time. So again, cheap land all day long, which means you can make products for way less money and then send those products someplace else and sell them for more. It's the same concept we did in China with warehouses, right? Because it was cheaper to build them there than it was to build them here. And the people who live there, which is another big piece of that, right? Growing wine in America is a very expensive thing because you have to pay people their health care. Like these aren't things that are covered. Versus in a place like France, the government covers all of that.
Mm.
Don't get me wrong, it's through tax revenue, but everybody pays their taxes for the most part. So now you have a pretty homogeneous society where people are okay with just growing wine. They don't need to be millionaire, billionaire people because everything in their life is taken care of. When they're done growing wine, they get a pension from the government and they're set. So it becomes less expensive to grow this particular wine, to grow these grapes, to produce it, to do everything, and then ship it someplace else to sell it for a very large profit margin. And that is the benefit of a tertiary market is go where there is a significant presence of government subsidization, prisons, military bases, farms, as easy as you can possibly get. But if you can go to another tertiary market outside of the US and look for another opportunity, you're going to find it and you're going to think to yourself, why don't I just operate from here instead of anywhere else? I was looking at wine operations in California and Texas. I was looking at them all over the country and I just didn't find anything, one, that was good, or two, that was at a good price point because it required such a massive capital investment to do in the United States because there is no process to back it up and get it started without having to take on one, a significant amount of debt, which is a lot of risk to businesses. So automatically it's you're not just covering the land costs when you buy a bottle, you're covering the debt, you're covering the health insurance, you're covering every piece of that company, each bottle, each time you buy a bottle. Versus if you buy from someplace in France, you're only covering the first part of it, the farmer's expense, which is very little. The second part, all the fees and everything associated with making the wine, that's the biggest expense. Then from there, you got to ship it. So in Europe, we can buy a bottle of wine for what is 6 to 7 euro every time. And then once we incur all of our costs to ship it, which is about another seven, anywhere from $5 to $7 just to ship it here per bottle, right? Well, now I can sell this wine to another restaurant for 17, $18 a bottle. My profit is maybe only $3 per bottle, but that's more than enough to be able to do that on a 13,000 minimum order, right? So you can kind of see that there's this very large ability, but in wine, that's not a huge profit margin, which allows us to really stay below the mark because I'm not importing from the most popular known regions in France with so much demand. I'm going to places with equal quality, and I even have the ability to make them equal quality once they're created and then ship them out for a lower price. That's all tertiary in the aspect of it.
Wow, that's amazing. It sounds like you've certainly done your homework on it, especially given that you've compared the European market, or I guess the French market, to doing business here in America. And it sounds like it's night and day, right?
It's night and day. There are some things you have to definitely get over, right? So one of my most infuriating conversations with one of my partners, he's like, well, it gets too hot during the summer, so they don't bottle the wine. And I was like, excuse me? Like, bro, I'm an American. Like, who cares if it's hot outside? You get your ass to work. Uh,
Yeah.
and that was really infuriating for me. But again, the concept was like, they don't have to work. Again, health insurance covered, pension covered. Like, save up for some months of summer for 2 months and go have a vacation. And then they come back and do it all over again, following that spring, that fall. So it becomes one of these things where sure, it's very different. And yes, there are some upsides, but there are definitely some downsides. The downsides are far outweighed by the good though. So it makes it something that you kind of have to force yourself to get along with, which is not at all my strong suit. I have to really kind of fight the urge to be like, profits and work. And so now it's like, all right, let's slow down and while they were doing their summertime stuff, I'm going to formulate new strategies for marketing. I'm going to see how our current orders are faring, and we're going to make adjustments so that way when we can start back up again, we're going to have the best product coming back onto the market later. So I will say I'm grateful for what that looks like and the difference of doing things in the US versus doing things in another country. Because in the US, people would be working the entire time. So you're kind of trying to churn out something, but you don't have the ability to adjust nearly as frequently. Versus in France, you do because you have to take all these breaks all the time.
Certainly, that makes sense. And when you're saying, I guess on the marketing side, when you're having it promoted by, maybe an athlete or a celebrity or whoever it may be, is the intention of having it sold at restaurants or particular venues, or where exactly, ideally, where would you want the wine to be sold?
So the wine gets sold online, which is probably our biggest bypass. Whenever we sell something to a restaurant, we're primarily just trying to go for bulk orders, non-labeled. So whenever we do something with like a celebrity, we have some influencers and like I said, a few actors and maybe, one or two athletes. The athletes are primarily our non-alcoholic beverages,
Hmm.
not alcoholic beverages. But the idea there is that you sell it online, you really use that brand power to be able to say, look at me, I have my own wine. And our wine names for what we've chosen are kind of funny and kind of outrageously out there, but the idea is like it's designed to sell as many bottles as possible. And the good thing about it is, what you'll really run into is, you can see that person's personality in their wine label. And if we do a good enough job on our end with the blending of the wine, you can really taste a lot of that with how that wine is going to be put into play. So no wine is the same as anybody else's. It's all blended differently. It'd be the same grapes, but it'd just be two different, it could be three or four different flavor notes from one grape even more than the other grape over here. So everybody has their own wine. And then that allows us to really just push and sell it. And selling wine online has become much easier. I don't want to say very pricey, but basically the equivalent of paying about $6,000 a month to be able to have the ability to sell wine online. And in doing that, I think what we've really done is opened up our bigger market right now. Again, wedding venues, catering companies, wedding planners, hotels, restaurants, that's what's keeping everything moving. Once the brand activations are done on the other side for the wine itself with the partnerships, we're looking at maybe a whole nother we'll call it, 70 something thousand orders every quarter coming into the States to be able to get wine out. And that's what we're really trying to shoot for.
I guess that sounds like that's the beauty of doing this online as opposed to other ways, right?
Agreed. And even better, right? The real estate in France is cheaper for me to store it and ship from France than it is to do that here in the United States. So even more, it's like, okay, so how does real estate really affect business and how does it really affect my business? That is something that I'm always thinking about. If I need to spend more money to bring it to the US, then I will. But now the price of the wine goes up for anything that's already here, ready to be rocking and rolling.
Mm.
Versus if I ship it to you from France, you're gonna have to wait a little bit, but it's gonna cost you a little bit less. So it's just about factoring in that pricing.
Huh. Would that mean that prices would fluctuate, or it's just more you need to be more cognizant of the price, if that makes sense?
I think I'd just make the price a little bit higher, right? And basically just say, okay, well, this is 2 day shipping versus 6 week shipping. See,
Mhm.
see the difference. So immediate versus down the line.
Yeah, that makes sense. Very good. Well, so if someone is interested in investing in your wine fund, I'm assuming they're guaranteed some sort of return, or how does that work?
Yeah, so words we don't like using, especially online, are going to be things like guaranteed. So primarily focusing on a targeted rate of 10% per investor with a 9% promote at the end. Basically giving you really good return, hedging you across multiple different brands that we're going to be owning. And a really big piece for those of you who would even like your own wine brands, we would give you 20% of that brand ownership. We'll take care of everything that is selecting it, bottling it, labeling it, and shipping it. The only thing you need to take care of is the ability to sell this wine either through your own website or through our website, regardless, doesn't matter. But we'd be able to give you 20% ownership in that particular brand if it's yours and you own it, which is a really big way that we're allowing ourselves to grow and make sure that we can reach as many people as possible, which I don't think is really being done with some funds. So by keeping our partnerships with large targeted individuals, just individuals with large followings, it gives us such a range of new customers to target on a consistent basis. And so by doing that, it gives us a really big spread, thus giving the investors really solid returns very consistently, being paid out per quarter. And for those of you who understand that the earned income tax and capital gains tax are two different taxes, letting it evergreen and grow to kind of make sure that you don't have a large tax problem at the end of the year every single year.
Absolutely, very good. And if someone is interested in investing with you, where can we find you?
Yeah, it'll be a very simple link. It is just booksolomonfloyd.com. You can schedule some time with me. We can go over all your questions and After that, if you're deemed worthy, no, I'm joking. But after that, we can send you some information on the fund and make sure that you guys are all informed with what you need to make your investment decisions.
Absolutely. Solomon, it's been a pleasure really, reconnecting and hearing about this very interesting real estate strategy, right? Because when someone sees wine, a lot of times you just see the physical product. You don't think that there's real estate behind that, and there's so much in the mix, right? So it's been a pleasure having you on the show.
Absolutely. Thank you for having me back. Glad to be here. Looking forward to doing it again.
Absolutely. For those of y'all who are interested in investing with Solomon, chatting with him, asking him some questions about wine, we'll drop the link in the show notes, and we will talk to y'all next time.